Hello all, welcome to Pivotal Traders. I hope you all had a wonderful weekday, and tomorrow is the expiry and we all are excited about tomorrow. So we have to make a plan because the day expiry day is very important for option sellers because it is the time when most of your strategy is gonna tell you whether you were correct or not. So we have a strategy in mind. I have also deployed some strategies positional because since now the best thing to do is to play positional because the margin rules are over and we have good amount of margin benefit also when you go for the premium DK over the positional sizing. So let me just start right away. If you want to know how the expiry day works and how it will end, watch the video till the end. And if you haven't subscribed yet, please hit the subscribe button. So let's start right away. We have two black lines here, and the reasons for the black line is that it has kind of worked in the previous history around this vicinity. So I have reduced the black lines looking at the price action around this level and the volume action around this high point from where the market went on the lower trajectory. Now, if the market is coming back to this level, definitely some of the put writers would like to defend themselves, and call writers would also like to have more robust amount of defend than the put writers, and the bulls and the bears will they will try to enter into an agreement where one will reject and the one will have to accept. So that was the kind of a story where the bears went ahead and they lift the market towards a downfall, but that was not enough. You can see here the lowest point was over here. The bulls were able to lift the market right from here, so the bears were not so activated around the low point of the market here. Now the similar kind of story can be repeated when the market is coming back to this level here, where we can get some kind of reaction like this, and then the market can go up. And since we have already started witnessing some kind of demand on the lower front, you can see this is a 4-hour chart. You can see there the wicks on the lower front is getting longer and longer, which shows that there is a sense of a demand when the price hits on the lower front. Okay, so based on upon all these things and also upon the data, we'll try to conceptualize three possibilities, and out of those three possibilities there will be one possibility which we should be trading for tomorrow. So let us look at the OI stats first. So if you look at the OI stats first, the maximum amount of call addition happened around the 37,000. Now if you look 37,000 call addition, but you will also see that the put writing at 36,900 also got a good amount of hit. So 36,900 can be a point where if the market comes to stay comfortably above 36,900, then the put writers will become more aggressive here. So they will try to lift this bar over here. They will write more and more puts, and the market can trend towards a higher trajectory like this. So this can be a possibility for tomorrow. Now if that happens, then the call writers around 37,000 will get scared, and the moment they get scared, then we can expect a big spike above 37,000. Okay, so that can happen tomorrow. You have to prepare yourself that that kind of movement can come very quickly, and it can be a like 70% probability is there that it can be a typical kind of expiry, but you have to take into account what can be a very violent move. Okay, so this is a viewpoint from the OI stats. Now if we look at the OI change, OI chain here, and there also you can see that 37,000 bears the maximum OI, and on the put side if you see that the maximum OI change happened at 36,700. Okay, and yeah, and the maximum OI on the put side is at 36,500. So these levels 36, 37,000, 36,500, these would be are the strike price which you should be looking forward to play smartly. Okay, so those are on the data front. Now if I am to talk about the straddle, let me just raise this. If I am to talk about the straddle, you can see that 36,800 You see there was a downfall here. Okay, there was downfall, then there was a kind of waiting period, then again there was a downfall. But if you're smart enough to see the momentum, the kind of magnitude of a downfall here was reduced to this level. You see how it was reduced. It is getting smaller and smaller. The magnitude of the fall is getting smaller and smaller. So what we can expect is there is a kind of a rounding like this. There is a kind of a rounding going on in the market. Now if the market gets this kind of rounding and gets to succeed over and above this like this, then we can expect that the 36,800 straddle can spike up. Now consecutively, if you see upon the straddle of 37,000, there is a more smarter story to look at. The most smarter story. Why? Because you look at the magnitude over here, then there was a kind of a waiting period here, a range formation, then the range breakout, then again the magnitude is being maintained here. So this kind of magnitude, if it is maintained to be on the front, then 37,000 straddle can be a good possibility for us to short tomorrow. Okay, so these are the backgrounds of the data of the straddles and how the point and figure charts are behaving. Now we look at the graph. So this is this is Bank Nifty's spot chart of 4 hours. Let me just switch to 5 minutes for you. So 15 minutes, sorry. So on the 15 minutes front, the possibilities would be very easy to gauge here. Why? So let us suppose that the market opens flat. So in the event of a flat opening, definitely the black line was crossed here. It will take a kind of a support here. Then naturally it will try to lift the market even higher. Then around 37 it will try to spend time and can become volatile to expire within this range. Now if it opens gap up, then you see that this kind of rally on the upside will be materialized by the bulls. They will not try to become a hero, try to carry forward their position till the end of the day because it is an expiry day. So they will naturally try to make some profit booking here. So then if the profit booking happens, it may try to take some support around the black line or may even pierce this and come quickly on the upper side like this. So this is a second possibility in the event of a gap up opening. Now the most realistic, it doesn't matter that whether it is realistic or not. The third possibility, which I think that it can be the case for tomorrow, where the gap down opening happens and quickly the bank nifty fills the gap, then try to confuse us and becomes in a range bound fashion movement within the black line, and then can slowly and steadily can drag on the upper side. Like this kind of movement can happen tomorrow. So these three possibilities are there, and naturally we have defined our expiry day between 37,128 to 36,700. So you saw that 36,700 also got huge amount of put writing, and 37,000 is also a good amount of call writing. So we are very much pretty safe around these levels. So these would be the expiry range for tomorrow. I hope you will like the video and you plan your expiry day accordingly. Try to play around the 36,800 straddle, 36,900 straddle, and 37,000 straddle. So those are the points which I will also be looking forward. Currently I have opened position at around 36,800 straddle. Let's see how it matures tomorrow. I'll be updating on the Telegram channel. Thanks for watching the video. Have a great day.